Welcome to the Kenya Electricity Generating Company. My name is Frank and I'll be your host today. This will be one of the main events of the year, actually half of the year. We're going to show you one of those figures which I'm sure will bring some fresh breath into the market sector of Kenya. To the chairman, KenGen, the CEO, Albert Mugo, and all invited guests, I think we're humbled to have you here today. It's so good to always start the morning with so colorful faces. At this very juncture, if you could look at your program, you're supposed to be moving to the main part of the day, and that is the presentation of the half-year results, which is going to be done by our CEO, Engineer Albert Mugo, together with the Finance Director, John Mudany. Without much ado, I welcome on stage our CEO and MD, Engineer Albert Mugo. A round of applause for him.
Good morning, everyone. I want to welcome each one of you this morning to this function and want to appreciate each and every one of you who is here today. I said that I will tell you about KenGen when I stand here, but I have very little to say after, after all that I had around the tables. But just to say that what I could tell you about KenGen is that I agree with all the above. All that has been said around the table, because that's really true of KenGen, and I believe in it. So this morning, I just want to say karibuni sana. When I look around here, I see every one of you as friends of KenGen, our investors, our development partners, our members of staff, and everybody really who wishes us well as we move on this journey together. So we are here today for celebration. We are here to celebrate our staff members who have been working very, very hard to achieve what we have achieved in this half year. I noticed that on Twitter we say that the team is saying that we are announcing the half year results. Maybe not quite, really, because if you read the Saturday papers, we already released our results. So we are not releasing the results today. Perhaps we are explaining a little more and giving you an opportunity to interact with us and ask questions that you would have liked to ask when you saw the results that were posted on Saturday in the newspapers. And we are very happy that you came. And we will be very brief because, you know, when you have a good story, you actually don't need to tell a lot of things because the story speaks for itself. So we intend to just go straight to explain very briefly the results, the half-year results, and I will just start. So first of all, it's true and it's been said that KenGen is a market leader, and as you can see on the slides here, we have 70% of the market share in terms of the installed power capacity. Hydro gives 820 megawatts, geothermal 514, diesel and gas 258, wind 26, giving a total installed capacity for KenGen as 1,618. The total installed capacity for Kenya is about 2,300 at the moment. So that's why those figures would give you the 70%. And when you think about KenGen, we have a strategic focus in various areas. Among them is the good to great, and you've heard that statement from a number of people around the tables. We, in the stories that we've told you before, a number of times, we indicated that we're committed to contribute 844 towards the 5,000 plus megawatts, and we remain committed to delivering our target for this 844. Secondly, geothermal development, we are sustaining the current growth by stepping up investments in geothermal generation because we believe that that's the future for Kenya, geothermal being our natural resource that will give us very reliable power, not dependent on the international fuel prices or the other fluctuations that we see. Number three is funding. As we do our projects, we are committed to, or we are focused to securing required funding from development partners for the next cycle of power projects And we have a number of them who are here today who are supporting us even in the next very immediate projects that you'll be seeing in the slides. We are also committed, and one of the people that introduced themselves or a number have alluded to this. We are committed to doing our rights issue, which is on course. Our target is to do this before the end of June this year, and that's a question many of you have been asking, but we can confirm that our program is really on course. Number 4 is the issue about revenue diversification. We are a power generating company, but we believe that when you look at the changes in the environment, we cannot continue just looking at being a power generator, because there are other opportunities that we believe with our experience and with the talents that we have, we can use so that we can diversify the sources of our revenue. So we'll continue to see high growth impact from other sources of revenue, including steam, where we've drilled steam and we can sell it to people for various things, including flower farming, manufacturing, and other things, and also getting into commercial drilling, which we've already done as we talk today. Number 5, we will continue to deliver capacity on time and on budget. Geothermal and wind development at an advanced stage, and our next projects are in stages where we can say we are quite ready to deliver. Our growth strategy planned and additional capacities in the medium term, and medium term here we are talking of 2016 to 2020, are clearly shown in this pipeline here. Currently we are at 1,618 megawatts. We are looking at 2020, which is about slightly above 4 years from now. We have a number of projects there, starting with the 25 megawatts of the wellhead units, which we're about to complete. Then 70 megawatts of Carrier 1, Unit 6, followed by our next big project, Carrier 5, 140 megawatts, a project that we will be issuing the tender documents to a list of pre-qualified contractors this week, actually. So you can, and that tells you that it's quite ready. Then Carrier 1, the oldest geothermal plant that was commissioned in 1981, we will be refurbishing it from the current 44 megawatts to reach 51, and so the additional capacity is about 5.7 megawatts. And after that, we have Carrier 6, where we have virtually completed drilling all the steam, and we are implementing this project on a public-private partnership model, and we are ready for that. We have a transaction advisor in place so that we can start preparing documents that will help us identify the JV partner that will go with to develop this project. We have Carrier 7, which is probably the one not as ready as the others, but we've started the drilling. We already have about 30 or so megawatts towards that project, and with the rigs that we have at site, we believe that we'll be able to get the steam that can help us realize this project also by 2020. In addition to that, the 280 megawatt project that we commissioned in 2014, we believe that there is scope to do some optimization and add from the steam we currently consume another 60 megawatts with some small investment. So on the lower part, I'm showing the megawatts, and on the upper row, we are showing the kind of money that we'll be needing for those projects. That is why on the wellhead leasing, the next one, which is 50 megawatts, we're not showing any investment because we expect this to be on lease. And so we would get developers put in the plant, and we buy the energy from them when we've given them the steam that they'll convert to electricity. So in total, the projects there from geothermal alone are about 631. And so when we tell you that we are committed to the geothermal strategy, you can actually see from the figures. But in addition to geothermal, we have also another green source, which is wind, and we have 80 megawatts in Meru and another 10 megawatts in Gong, where we already run a 26 megawatts wind. So in total, by 2020, we expect that the installed capacity that KenGen as a company will be having is 340 roughly, and the total investment required is just about $2 billion for those projects. And today then we are here to just share with you and to explain to you our results, which we say we've delivered on strong financial results. And that's a snapshot of what we are discussing today. The revenue, the EBITDA, the EBIT, the profit before tax, the after tax, the comprehensive income, as well as earnings per share. And because that's just a snapshot, let me show you the details in the next slide. So if you look at the revenue growth for the half year, and here we are comparing where we were the first half year of 2015 fiscal year, because our years ran from July to June. So when we talk about half year 2015, we are talking about what we did in the other financial year compared to what we've done now as of December 2015, which is our 2016 financial year. So in the financial year of 2015, we had a revenue, electricity revenue, rather we had a revenue of 12.18 billion, and this half year that has grown by 52% to 18.52. And I think we can agree, all of us here, that that's a strong growth and increasing by any standards. And in terms of profitability, the EBITDA has changed from last year from 8 billion, and now we're talking of 14.2 in the half year. The EBIT from 4.9 or just about 5, a 95% increase to 9.7 billion. And the profit before tax has also changed dramatically from 3.79 in the last year, the 2015 financial year, half year, to 8.38 in this half year, a 121% increase. And the profit after tax has changed by about 15% from 4.9 billion to 5.6, just about 5.7 billion. And part of the reason there is because in the previous year we had some tax credit, but in this year we didn't have the tax credit, but we're actually paying tax on that. And then in terms of the revenue growth and just explaining a bit how it has changed, you can see the reasons for that, and that's why I said in sharing here, it's just really to explain a little more about the results that you've read in the papers. So we have the total revenue here that we said is 12.18, which has grown by 52%. And you can see that in terms of the growth, the gray shows the electricity revenue, which has grown from 11.6 to 14.7. And we have the other income that has grown dramatically from about 352 to 3.47 billion, and the interest income from 172 to 289. And we've just moved on to the right side to explain the growth in other sources of revenue, where we have shown the insurance, what it has given us, the 296, the drilling services that have given us 538. Is that correct? No, the drilling services that have given us 617. The steam sales that have given us 538. And steam sales here is because we have some wells where we sell our own steam to people, a flower farm, and also for power generation. And then we have a big figure there of 1.9 billion, which is because of the maintenance of steam resources, where GDC, through funding by government, had done some work in Okaria that is giving us steam towards the 280 megawatts. We pay them steam charges But because that reservoir is within our license area, we are the ones who do the maintenance and all the other services that are required to produce that steam, and that revenue is associated with that maintenance. And talking about new geothermal capacity driving the electricity revenue, of course, in the first half of 2015 financial year, you can see that the hydro, the revenue that we're getting from hydro was at 3.7. The revenue from geothermal was at 2.9, and the revenue from thermal was 1.56. But in this half year, the hydro revenue did not increase so much because we've not increased the capacity of the hydros, even though we generated a little more from the hydros as a result of the rains, but the revenue increased from 3.7 to 3.8, a very marginal increment. But if you look at what geothermal contributed, and I think that's the emphasis we want to give, in the half year, we moved from, comparing the two half years, from 2.9 billion to 5 billion. And that came as a result of utilizing the 280 fully. We can see the full impact on that. Because in the financial year 2015, for example, Carrier 4, 140, had only operated from September to December. The Ocarria 5, we had not, rather Ocarria 1 units 4 and 5, we had just commissioned it, but we had not started making any money from it. So that is showing the impact, the full impact of the geothermal when it's in operation, and perhaps pointing to the fact that as we put in more geothermal, this is the kind of trend that you'd expect to see. Of course, for thermal, you can see there was very little change, and then the total growth in the units, in the capacity revenue, was about 26%. And on the right-hand side, which is the energy revenue, because, and I think we've explained this in the past to some of you, because we have the capacity revenue, which is really the revenue that we get, and it's fixed. We are assured of that as long as we maintain our power plant completely. It's like what you'd call the rental revenue for our plant. We've rented our power plant to Kenya Power to dispatch, to use them to generate the energy, and for that we are paid that money. Would be paid that money whether or not we generate, but fortunately, because of our sources of generation, we'll be paid all the time. But on the other side, on the right-hand side, that is the energy revenue, and that is the revenue, the money that we make for every gigawatt hour or for every unit that we push into the grid. And therefore, when you look at it, the hydros, we got 828, and in the year we are talking about, in half year we are talking about, it was about 750. The geothermal again, for the other half year, we had 1.7, and for this half year, having generated more from geothermal, that increased to 2.6. For the thermals, 327 the previous year, and this year reduced somewhat because there was a reduction in the thermal generation. And so if you look at the growth in the energy, then we have a total of 32% from 2.9 to 3.8. This is electricity revenue showing a continued growth, and it is electricity revenue over time, and the bars here are showing the electricity revenue in million shillings, and the other part there we are showing the revenue per megawatt, just so that you can understand why we would be focusing, rather how our growth in revenue is changing over time. And you can see that probably from 2008, where we had about 11.49 and almost stagnant in terms of revenue per megawatt, reaching 12 in 2010, even coming down to about 10.41 million per megawatt. We are now, after commissioning the geothermals in 2015, you can see that that has increased, so that by 2015, at the end of 2015, with a bit of geothermal coming in, the 280, we actually rose up to 15.83 million shillings per megawatt. And this year, in the half year, we recorded 9.12 million per megawatt, but that's only half year. So we've put the dots there to indicate if you project, because that's electricity revenue that will not change because our plant will be available, we will be dispatching it. We're expecting that the total for the year is actually 18.24 million per megawatt per year. And you can therefore see that trend. And as we increase more geothermal, that can only get better. And here we are showing now the half-year part for plant by plant, the wind giving us 9.19 for half-year million per megawatt, the thermal at 7.18, the hydros, which are the ones that give us probably the least of them, at 5.6, the geothermal at 14.92. And I emphasize this is for half-year because you saw the number for the full year was much higher than this when we put all the plants together. And the way the sales have grown, I think for the half year, you can see the results here again. We had 3.383 as total, and they're broken down there to see the hydro, geothermal, thermal, and wind, and that has grown by about 16% to 3.914. And the bigger part there was geothermal that grew a bit, and the hydro also changed because of the hydrology, and this has really helped us to reduce on the expensive of thermal. And looking at now the income statement, just a bit of explanation here, where you can see our total revenue of 14.757, which is made up, as we said earlier, of capacity revenue of 10.45, energy revenue of 3.89, and net forex adjustment 409. We because of being a regulated industry, and we are paid for electricity using the Kenya shillings, but our loans are in foreign exchange, quite a number of loans. The regulator has allowed us to be passing on any forex losses to the consumers of electricity, and that's why when you look at our accounts, you'll be seeing that element of forex. Because we are regulated, we are not like other industries where maybe if there is a change, you just change the course of your thing. So the regulator has put that element there to shield us from this kind of changes. So that's the total revenue, and we are showing the steam revenue here, which contains the maintenance part as well as our own steam at 2.4. We have other income at 998, and then the operating expenses at 3.998, about 4 billion, giving us the EBITDA there of 14.23. Then the depreciation of 4.519, and that depreciation takes account of our revalued assets. For those of you who may have looked at our end of year results last year, you would have seen that we had a revaluation of assets that put quite a big value on assets. So the depreciation there takes account of the new values of our assets, and leaving us with EBIT of 9.7, interest income of 289, interest expenses of 1.6, and then the profit before tax at 8.3. We paid tax, rather we are showing the tax expenses of 2.7, leaving us with the profit after tax for half year of 5.6. And the cash flow, we started with a balance of 3.29 in the bank. The net cash from operating activities of 10.8 billion. We got new loans of 4.5 billion, repaid 3.8, so we have a net there of 674. And then we used 12.23 net cash used in investing activities, and so the cash balance as of 31st December 2015, we were at 2.5 billion. Some of you may recall that There was a time we were ending with a cash balance that was negative, but our business and the way we're operating, we've been able to improve that to a point where we're ending up with a cash balance that is positive. And as I come towards the end, let me just show you quickly our financial position here, looking at our debt, and I think this is quite important for many of you. You can see here that the government of Kenya guaranteed loans stand at 28.5%, which is 42.7 billion Kenya shillings. We then have loans that we've taken, and those are loans that we've taken directly from our development partners, but GOK has guaranteed, which then has made us to be able to borrow at very good rates, which then results in a lower cost for the electricity. Then the other part there that shows 46.3% or 69.51 billion, those are loans that are on lent to KenGen by government. And what happens there is the government has gone to the development financial institutions, borrowed money at quite reasonable rates, and on lends the same to KenGen for our development of projects. And that is where we stand as far as those loans are concerned. And then we have loans that we've gone to the banks directly and borrowed and not guaranteed by government, and those stand at about 25.2%, the total amount being 37.73 billion as of 31st December 2015. Now, when you look at that kind of debt, and again, for the analysts, this is very important for you to appreciate, because we get this question many, many times. The weighted average maturity is 15.4, which is quite good, because on our borrowings, let's say from the local banks, I think the maximum tenure we have managed to achieve right now is 12 years. But when you look at the other loans we get from development partners, some of them are 20 years, some 25, some 30 years. So when you look at the average maturity period, it's at 15.4, and the weighted average cost of debt is then at 4.09%. And we've given a breakdown here in terms of how many we have in Japanese yen at 4.6 billion, the euro at 32.5 billion, the US dollar 63.6 billion, and the Kenya shillings at 19.3 billion, just about 12.9%. So most of our loans are actually foreign denominated, which drives home the comment I had made earlier, why we needed to be shielded from the forex changes. Otherwise, without that, we could run into a lot of problems when our shilling depreciates. And then our financial position is like this: the property, plant, and equipment. This is our balance sheet at 312.9 billion. And then the other non-current assets at 20.2, the current assets at 21.89, giving us a total of assets of 355 billion. So that's the size of our balance sheet. And on this other side, we've shown how that's come to be. We have share capital of 10.5 billion, retained earnings of 57 billion, other reserves of 77 billion, total equity 145.8, then long-term loans, part of which we've shown on the other side, 122.4, and long-term loans that are waiting conversion from government, which are subject of the rights issue, at about 20.15, giving us, and then other long-term liabilities at 45.34, short-term loans of 9.8, other current liabilities of 11.4, total liabilities then at 209, and that balances with the total assets that we had on the other side. In conclusion, why would you sitting here, or you sitting here advising somebody who wants to invest in KenGen? Why? What do you tell them that is the reason that they should invest in KenGen? One is that KenGen delivers on mega projects and capacity, and we're really proud and happy to say that even when you look at the 5,000 plus megawatt that the government of Kenya committed itself in 2013, KenGen has delivered the giant share of that, and it's true that when you look at the projects that we've put in place, we've done them on time. We have put the very best that we could, and we have got good projects that are driving the economy of this nation. Number two, we have a large asset base which serves as a solid growth platform. You've seen the figures. I've explained what they mean to you and how it is that they are helping our business to grow. We're emerging world geothermal leader where we are, and I believe that as we do the program that we've shown there, very soon you'll be seeing Kenya moving from position 8 in terms of geothermal in the world to probably 5 or even number 4. We have strong growth and profitability, and the figures that I've shown you and reasons for those figures attest to that. And we are also consistent and stable in dividends. And some of the people, when introducing yourselves, you attested to that and gave testimony. I was glad to hear somebody say they received their check just very recently for the dividends for the year 2015. So we are consistently paying dividends, and we've been stable in that. And not only that, we are market leaders, and we plan and we are focused at continuing to be market leaders. So I hope then, therefore, as we continue with our conversation this morning, even as you try to clarify anything about the figures that I've shown, and I'll be seeking the help of my finance and ICT director in answering some of those questions, I hope that as you go, you're actually going convinced that KenGen is the place to be as an investor, and you will invest. If you don't have shares in KenGen, this is the time to buy the shares. And and if you're advising somebody who may be having money and doesn't know where to put it, please tell them that you've just discovered this morning, or at least you are convinced that this is the place to put it. I think I'll wait there, and then we can interact a little more over the questions that you have. Thank you very much.
Thank you very much, Engineer Mugo. I think every day he continues to amaze us.